لأجاريهم قلدت ظاهر ما فيهم فبدوت شخصا آخر.
Assalamualaikum warahmatullahi wabarakatuh and good day everyone. My name is MEGAT DANIAL, representative from Group 5. Today, me and my group mates will present to you about the topic of zakat and tax planning for Muslim entrepreneurs. So, without ado, let's get started with the presentation. Here is my team members that will cooperate for today's presentation journey. So don't worry, you will meet them soon for every part of the video. So that's why don't skip any part of it, and please watch it until the very end. So without ado, let's get started with the main topic. For a Muslim entrepreneur, fulfilling a zakat is not only a pillar of faith but also a strategic financial responsibility. And when integrated with effective tax planning, it creates a framework that honors both religious obligations, also legal compliance, while optimizing its business resources. For your information, zakat is payment of a percentage of a Muslim income properties to an authorized zakat institution through a zakat collector that is called amil for distribution towards other needed Muslims as specified in the Sharia. As Muslim entrepreneurs, we know that zakat is one of the 5 pillars of Islam. It's not optional, but it's a spiritual duty that purifies our wealth and also supports those in need. On the other side, we have tax, which is a legal obligation of under Malaysian law. Just like zakat, it requires a careful calculation and timely payment to avoid penalties occur. Next, I will explain to you about the 5 regulative frameworks that in the zakat, also the tax income in Malaysia. The first area is called the zakat administration in Malaysia, which it defines the types of zakat provided, its calculation methods, and also its collection procedures. It authorized from the State Islamic Religious Councils. The second one is called the Federal Coordination, which its role is to mix the Islamic administration across all the states in Malaysia, which the key law that states is by the Department of Islamic Development Malaysia, JAKIM. The third one is called the Zakat on Business. Its role is to calculate the zakat payment based on its net working capital, net assets, or net profits. The fourth area is called the tax income, which is characterized by the Income Tax Act 1967. Its goal is to control the corporate and personal income tax that include zakat rebates and also deduction provisions. This will be regulated by the Inland Revenue Board of Malaysia, or in short, it's called the LHDN. And the last one is called the zakat tax link, which is divided into 2 roles. The first role is the ITA section 6A3. The role is the zakat paid to the sector Islamic Religious Council, which is, for example, RM1 tax rebate will be divided for every RM1 zakat received from the Muslim individuals. And the second one, which is the ITA section 4411A, which the role explains that zakat paid by the companies must be deducted up to 2.5% based on the employee's aggregate income, and both of these criteria being authorized by the LHDN. Now, the next one I will explain to you about the literature insights with the relevance towards the Muslim entrepreneurs. From the literature perspective, we see that zakat and tax are 2 distinct systems, which is zakat is a religious obligation rooted in the Sharia, while tax is a legal obligation under the civil law. For instance, in Malaysia, these systems are kept separate but connected through incentives such as rebates and deductions. Studies also highlights that both contribute towards the socio-economic development, which is zakat directly supports the asnaf, while tax income funds the national infrastructure. However, the research also points out that zakat compliance is often voluntary and less strictly enforced compared to tax, which means awareness and strategic planning are the main key of it. For Muslim entrepreneurs, this insight is highly relevant. By integrating zakat into tax planning, we can fulfill our faith-based duty to meet the legal requirements and optimize our business resources. This not only strengthens our financial position but also builds trust with Muslim clients and also their stakeholders. So, let's go to the next topic.
Assalamualaikum and good day everyone. My name is Danish and today I will be presenting on the current practices of zakat and tax planning for the Muslim entrepreneur in Malaysia. First, let's look on at the individual practices. Muslims are required to pay zakat annually on their income, savings and business profit. Once they reach the nisab threshold, which is the often linked to the value of gold. These zakat payments are made to the state religious authorities known as Majlis Agama Islam. At the same time, individuals file their income tax with the Inland Revenue Board of Malaysia or LHDN. To avoid being taxed twice, the zakat paid can be claimed as a tax rebate, while payroll tax deduction, known as potongan cukai bulanan or PCB, is commonly done monthly by employers. Payroll deduction for zakat is still voluntary and less common. Currently, zakat and tax payment are managed via separate systems. Now, for the corporate practices, Muslim-owned companies pay zakat on their net business profit, typically at rate of 2.5%. While paying corporate zakat is voluntary, it is encouraged as a part of religious duties and social responsibilities. These payments are made directly to state zakat authorities or company zakat centers. Company also submit their corporate tax filings to LHDN, and in some states, zakat payment can influence tax rebate or reduction. However, there is no unified system yet that integrates zakat payment with corporate tax filings. Some companies include zakat payments as part of their corporate social responsibility or CSR initiative. Lastly, let's touch on some key challenges and recent development. Currently, separate platforms for zakat and tax payment create inefficiencies. Efforts are underway to adopt one-stop digital payment platform that integrate both payment into a single system. Payroll deduction for zakat are gaining traction but are still limited in adoption. Additionally, transparency and data sharing between zakat authorities and LHDN are improving, aiming for better coordination. In summary, while there are established practice for zakat and tax payment individually, the integration is evolving to simplify compliance for Muslim entrepreneur and enhance system efficiency. Thank you for listening. I hope this gives you a clear overview of current practices in zakat and tax planning. My name is Danny. Thank you.
Hi and Assalamualaikum. I am Najwa. So today I will continue with the case example and data analysis. For example, Farida owns a small construction company in the Terengganu. In 2024, her company makes a good profit, so Farida needs to pay corporate tax and need to pay zakat on the business income as a Muslim. So she integrates zakat into her tax planning. At first, Farida worries about she needs to pay in double, once for tax and one for zakat. But after meeting with the accountants, she learns that the zakat can reduce her bill. So instead of paying both separately, she integrates zakat into her tax planning. This way, she fulfills her religious duty at the same time reduce her tax bill. After my analysis, here are two charts for the Terengganu Zakat in 2024. Left chart is for sources, which is most zakat comes from income, followed by business, and then savings. Right chart is for users, which is most zakat distributed to the poor, followed by educations, and extremely poor. For Muslim entrepreneur like Farida, the key point is the business zakat is a major contributor in Malaysia, and paying to the madam is not only reduce our tax bill but also ensures our money directly supports to the poor and needy in Terengganu. So, I will pass to the next presenter.
Next, let's start with our recommendation. Our first recommendation is to integrate zakat and tax payment into single digital platforms. This will make the process faster, easier and more transparent. Next, we recommended standardizing zakat policies across all states in Malaysia. This consistency will really help both individuals and businesses. We also suggest more education and awareness programs. Entrepreneurs need to clearly understand how zakat impact their tax planning. On the corporate side, we recommend encouraging businesses to adopt zakat as a part of CSR strategies with clearance intensive from LHDN. And finally, leveraging technology through apps, e-wallets, and real-time tracking can make the whole system more trustworthy and user-friendly. So, to conclude, zakat and tax planning are not just about compliance. For Muslim entrepreneurs, they represent both a spiritual obligation and a legal responsibility. Exactly when managed together, they help optimize business resource, prevent about double taxation, and create a balance between faith and financial growth. Still, we can see challenges like separate system for payment, different across the state, and limited corporate enforcement. That's why a proper budget plan combined with zakat and tax planning is so important to achieve long-term financial stability.